Welcome to the Market Huddle with Patrick the Content Machine Serezna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's Friday, October 25th, 2019. I'm Kevin Muir. And Patrick's flaked on me, so I'm running the board all alone. In this episode, I'm joined by Chris MacIntosh of Capitalist Exploits, and then Harris phones in for this month's Kuppy Corner, where we get an update on the shipping story. Then, since Patrick's away, I've thrown out the script and basically wander all over the map with the return of the infamous trading couch. Finally, I end with the top 5 things to watch this week. Lena, hop on. You were kind enough not to leave on me, so you're here.
Yeah, I'm here.
Who is the sponsor this week?
This week, we're sponsored by Three's Brewing Company in Brooklyn with Kicking and Screaming Pilsner.
Okay, let's have a look. Or a sip. Now, we don't have the sound effects of the can opening because both Lena and I have already started.
That's right.
That's right. It's actually quite nice.
It's very nice.
Yeah, no, that's really good.
I like it.
You know what? This is good that Patrick wasn't here because the reality is this is too good a beer for him to enjoy.
That's right. He wouldn't appreciate this beer.
By the way, for those who don't know, Patrick is actually he's not quite playing truancy or anything like that. He's actually in San Francisco for the Gold and Silver Summit show where he's on a
Silver
panel.
And Gold Summit.
Oh, there you go. Something. I'm not very good at updating it, but you know, the Silver and Gold Summit, and he's actually on a panel with Brent and who's the other? And Grant Williams. There you go. Thanks for Lena.
I believe there was one more guest. I believe it was Cal Everett, but
there we go. Sure. Lena is way better. Okay, so let me go do my legal stuff and we'll get to it and see if we can have some fun.
That's right.
Clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. For more information, please visit eastwestfunds.com. Now, Lena, usually I have a funny part or something that I try to be funny there, and I've completely fallen down on that as well. I just want to give everybody the heads up that as I was running it alone, there is lots of things that I am going to fall down on in the coming hour and a half. Lena will do her best to try to make
than usual.
That's right. I always fall down, but I'll be falling down even harder than usual. Anyways, let's get to it. We got a couple of great guests. Let's see what I can do all alone and see how bad it is. Joining us now is Chris MacIntosh, the founder and writer of the Capitalist Exploits blog. Thanks for getting up. It's early in the morning for Chris. He's joining us from Singapore. Thanks for joining us so early in the morning, Chris.
No worries. Thanks for having me on, Kevin.
So we were chatting a little, trying to figure out what we were going to talk about, and then you said the words that were just they just sang into my ears, and I said we have to talk about this. Let's start with that. You said something to the effect that everyone's talking about the fact is that they think there's a bubble in the stock market, and that's not where the bubble is. That it's actually in the bond market. And when I heard that, I said, "Oh, geez, you know, Patrick's not with us today. We're going to have to talk about that because I couldn't agree with you more. But I'd love to hear what kind of where you're coming from and why you think that that's the most dangerous spot for investors today."
So, do we even need to cover on why? Like bonds, if we just look at the the valuation of bonds, we've never been in this sort of territory, not even in history. It's like not even like a matter of going back and looking at previous examples of valuations, if you will, in the bond market at the levels that they exist at today. We're literally in this uncharted territory. What's interesting to me is it's really just about human psychology, I think, because market prices are really just a collective of decisions being made by hundreds of millions, billions of people on the globe daily. And the thing, like if you step out of markets and you look at war, for example, there's an oft saying that the generals fight the last war, right? And that's
Right.
basically how our minds work. We look into our rearview mirror, which is in our own lifetime, and we go, oh, what we're pattern seeking or pattern recognizing animals, human beings. And so
Right.
we look for these patterns, right? And those that are most easy to identify are the ones that we've personally experienced. And so if we're like, here we are sitting 2019, and the last major hiccup, if you will, that we had was the GFC, which was um, what got hit. It was equities. And so everyone's sort of looking around for the next GFC. And as a consequence, people are, all terrified that the equity markets are the place not to be. Now, I'm not necessarily bullish the equity markets. I'm kind of ambivalent. I'm more focused on particular sectors. But I guess the point that I want to make is that um, it's, I kind of think markets are like, they're like an Alzheimer's patient who occasionally forgets he's got Alzheimer's and then remembers everything. And, and that's like what happens, right?
Right.
You have LTCM, you have all these crises, and you look back and you go, oh, duh, right, of course. And but in each of those events, everybody's been looking in their fairly recent rearview mirror to say where is the risk, and it's sometimes it's currencies, and sometimes it's commodities, and sometimes it's bonds, and sometimes it's equities. And it's just so surprising how frequently markets get it wrong.
Yeah.
And again,
I
so it's
think
just kind
I
of human behavior.
Right. So I think that to your point about us being pattern seeking kind of creatures, nothing illustrates that better than the people that are taking the basically the 35-year bond or 40-year bond bull market and drawing a trend line and saying, look, this has gone from the long bond has gone from 16% down to 2 or whatever the number is. It's going to continue down to 0. And some people even go as far as saying it's negative. And I always say that one of the worst things you can do as an investor is go look at the behavior of that asset class only over those 40 years. And one of the things that we should all be doing is going and looking back over 100 years and to see how those asset classes worked over that longer time period.
I kind of look. You and I could have had this conversation, 10 years ago, and you know what? We would have both been wrong.
That's right.
So there's value, I guess, into looking at major trends, and often they'll go off. They tend to overshoot on every metric, and that's not just, again, like I said at the start. Markets are really just an extrapolation of human behavior, and so on a social scale, we overshoot as well, right? And And so when I think about an overshoot, one of the principal things in investing, certainly as you get older, and I'm not 20 anymore, so my risk tolerance changes. I'm much more interested now in minimizing risk, in basically ensuring I don't get run over by a truck. And so
Right.
that's kind of like my first port of call. I say, okay, well, how do I? Is there some way for me to create a put underneath whatever the hell it is that I'm doing? And so when you talk about like the 30-year bond, um, it's more about what is the risk to taking that position if you think that it is going to go continuously lower, and the bond going higher and the yield going lower. What is the risk that you're taking? And so at some point you get to this basic mathematical equation where you look at it and you just realize that even if it carries on for another 5 years or 10 years, your risk is just so asymmetrically terrible that you shouldn't be taking that risk. You should either just be out of the market and just going and sitting on the beach and doing something else, or you look and you say, okay, well, how do I take the other side of this? Because the other side is typically something where your returns can be fairly phenomenal. So
Right.
we look at the
One
risk side of things, it's like,
Yeah, so one of the things that I guess that you mentioned is that you can also go and try to find other cheap assets, stuff that with I think you mentioned the fact that it has a put underneath, and I guess one of the where you're headed with that is that if you buy something that's cheap enough, that you're not going to get hurt as much, even if you're early. Do you have any sectors or any kind of stocks that you like in particular that fits that bill?
yeah. So, well, firstly, I used to trade way back. For about 2 years, I just traded currencies. I wasn't in any particular position for more than a day, pretty much. I'd have about 10 to 15% of my portfolio that would be, the longest was like a week out. And I was a freaking horrible person to be around because it was really, really stressful. And so after 2 years of doing it, even though it was profitable for me, I was like, this is going to end in divorce, and my kids are going to hate me, and that's not really where I want to go with life. And so you kind of learn these lessons about yourself. And one of the things that I now try and do is be able to just chill, really. Be able to take a position where I don't have to worry so much about that time frame, and then position size such that I don't have to, basically I don't have to stress. So that's kind of like a fundamental way I think about sort of constructing a portfolio. And then when you talk about like the bond market, so I'll look at things if we were gonna short the bond market, unless I'm playing with futures, and then I'm back into the Chris is a shitty human being to be around because he's trading in futures contracts, and that's just
Chris, are you
it's
trying to
bad.
say that everyone that trades futures contracts is a shitty human being?
No, if Chris trades futures contracts, he's a
Okay.
shitty being. And so it just it takes a certain stomach, and again, like kind of knowing yourself. And so I prefer to look at stuff. I really don't like shorting. And I prefer to try and look at second order effects of whatever it is that's taking place, right? So if we think about bonds, we go, okay, what has been a consequence of this massive bond bull market? What asset classes have been benefited? What asset classes have been spanked as a consequence? And then you start sifting through all of that rubble and forming a picture. And so when I do that, I get to certain asset classes which have been absolutely starved of capital, and then you have that somewhat synthetic put. When I so yeah, as an example, I know you've been talking to Kuppy, who's a good mate of mine, I don't know, a few weeks back, and we're both bullish on shipping. So you can think about shipping like just as an example. There's a bunch of them, but unless we're going to stop moving goods around the world, we're going to need ships, right? And
Right.
so, and then at the same time, the ability for these shipping companies to finance has been just decimated, and there's almost now no analysts covering them. And there's a whole, could really go into. I won't go into it too much because Kuppy did a pretty good job of it. But essentially, that's one of the asset classes or sectors, should I say? It's not an asset class. Which has been negatively impacted, and so that's kind of, for me, I prefer to try and play things on the long side with deep value setups whereby I can just be super patient. I mean, the other thing, and you'd know this, for I got into this industry 20 odd years ago, and I still remember the guys. I had buddies who were arb traders, right? Like those jobs don't exist anymore. It's all just machines now,
That's right.
right? But also there was um, time frames. You had these. Even your average retail investor, they'd go and they'd buy something and they'd hold it for a few years at least. The average hold time today, apparently, according to stats I was looking at, is under 4 months for an equity. And I'm
That's
like,
right. Because
you
most people don't trade equities anymore. It's basically just professionals, just shooting each other in a room, right? That's basically what it's just hedge funds with occasional professional all shooting each other with no real, like, we used to laugh and say, where were the dentists, because we would sell it to the dentists. And that's when you knew that you should get out of a trade. And nowadays there is no dentist. There's just the late hedge funds. So we have shipping. Yep. Is there any other? Are there other kind of down and out industries / sectors that we should be looking at?
Look, broadly speaking, the commodity space is very interesting to me. Part of that is just supply and demand. Again, the supply side has been hit because of capex. Pretty hard to finance stuff. And we came out of a bull market back in 14 or sort of 2013. So these things are cyclical. So there's a cyclical nature to commodities in general, and that's a broad topic. But we're interested in those. And generally, I don't really like commodities. They're fucking horrible. I mean, if you think about it as a business, you have something which you're either trying to find, which means you're burning capital with like a hope and a prayer, right? Or if you're further down the development cycle, you've now found an asset, and then you're burning capital, hoping to figure out that you can produce enough of the stuff to actually, meet your cost of capital or actually exceed it. Right. If you're in sort of development, or if you're in a production company, you now have found this asset, and you are depleting the resource that you found. So in theory, it should be going down every day. It's kind of like if you had a store full of goods and you're just selling stuff out the door, and it's like you can't tell me that after you sold half of your goods that you're worth more than when you had a shop full of goods. But that's that's kind of so I kind of don't really like commodity markets from that perspective, but that's just you get drawn to where value is, and so that's where we're looking. And in particular, energy. I believe energy is easily the most interesting sector for us, and there's a whole number of different reasons why I think that's where we need to be.
Do you think it's first of all, energy is completely unloved. It's one of those things. I think it's more hated than the cigarette stocks in terms of the kind of social pressures from money managers to own. And you see also like the Norway kind of sovereign wealth fund recently divesting all of their assets, all their energy assets. And I actually wonder if that's that energy sale, which although they've done some of it, it's the big sale is still to come. Although they've announced it, it actually hasn't been done. I'm almost wondering if that's going to be a situation like when the British central bank sold all their gold into the lows, that the Norwegian sovereign wealth fund will end up selling all of their oil stocks into the lows. But do you think that that's the main reason that energy stocks are so kind of depressed, or at least one of the things that's contributing to that kind of cheapness?
Yeah, I think you nailed it. I mean, there's a number of different pieces of this particular puzzle. If we look at the, I don't know, let's call it social, or I don't even know if that's the right word because I don't agree with it. But the zeitgeist, if you will, at the moment around things like climate change and carbon emissions. And all of this. On that front, there's a massive pressure. I mean, I've spoken to some CEOs of energy companies, and one gentleman told me, off record, he's in his late 60s, and he said, "Look, if we went out now, if I proposed to go out now and spend a whole bunch of money on some offshore drilling," he said, "the board would replace me. There's just no appetite for it." So, I'd rather hang out and collect my pension and just keep things going. And I was like, well, you're running a company which survives on replacing your reserves. And he's like, yeah, I know. So anyway, so you've got social sort of pressures that are causing a lot of these major companies to not replace reserves. At the moment, we're burning through 6 barrels of oil and we're replacing it with 1. So there's that dynamic going for it. And there's another big part of it, which is to me just um, it's there's like a collective hallucination in that the markets the markets believe that somehow we're going through an energy transition, that we're actually shifting to renewables. And the truth of the matter is that we've actually never really gone through energy transitions in the way that people are thinking about them. So, for example, when we went from wood, when we were burning wood and then we found coal and we're like, oh shit, this stuff's way better,
Right.
we actually continued burning wood. What we did was we added energy to the mix, and that added energy then became the biggest component. And so coal, as a major source of energy, was far greater than wood. But,
Right.
and this is the important part, we still we consume more wood today for energy than we did um, before we moved to coal, and we consume more coal today than we did before we moved from coal to natural gas and uranium and all the other components. So what we do is that, look, the way to explain it, I think, is like this: if you've got a if you've got a little 2-bedroom house there, and I added on a garage for you, and you've got kids, you'll fill it. It'll be like kayaks and bicycles and all sorts of stuff. And then if I came and I added another garage to your house, you know what'll happen? You'll get like a home gym, and then your wife will have a treadmill, and like you'll just fill it with shit. It's a little bit like our cell phones. I mean, we have more and more capacity for our phones, and what do? We just keep filling it with videos and phones and Instabook and all sorts of shit, right? So that's basically what the whole energy complex looks like. So today we're actually, yes, we are increasingly utilizing more solar and wind and, call it, quote unquote renewables. They're making up a slightly bigger portion. And I say slightly, it's really isn't that great. Um, and at the same time, there's this collective delusion that they're going to replace things like oil. And it's just batshit crazy. It's just not going to happen.
Yeah, well,
So,
the other thing that I find amazing about when people look at the energy, they all focus on the supply, and they'll talk about, oh, there's all this renewables coming on stream. And I said, have you ever looked at the demand side of what happens when a country becomes richer? And you go through and you look at Japan, the energy use per capita as they came out of the Second World War, and it looks like a hockey stick. It grows a little, grows a little, grows a little, and then they hit this level of wealth where it grows, very quickly and very straight up. And same with Korea I guess Korea was in the 60s, and that was the same looking chart. And the thing is that China is just entering that stage when they're going to start using way more energy than than any of the kind of the bears suspect. And that I could completely see what you're saying is that, yes, renewables will help with that demand, but there's no way that they're going to, fill it up just, using electricity. They're going to be forced to grow and to use the old dirty kind of fossil fuels as well.
here's another cool thing. I wrote an article about this some years ago. If you look at Japan, you're talking about Japan. So when when their property market crashed and the Nikkei crashed, you go and you have a look. The one thing that held up, energy.
Right.
That's the one thing that, because you don't. It's like you don't reduce that. That's
Yeah.
your very basic. Um, you'll sell your t-shirts and you might even sell a kidney, but you're gonna keep your freaking lights on. And
Okay, so
so,
here's a question for you, though. You said the fact that the major energy companies are taking 6 barrels of oil and are replacing it with just finding one new one. What do you do in terms of setting up an investment thesis? Because wouldn't you say, therefore, that the stocks are probably not a good buy because they don't actually have the asset, and you might be better
yeah,
off actually just buying the commodity?
it's a tough one. You nailed it. partly. I mean, there are some companies that are better than others, right? Those that are, I don't know, how do we say this politely, politically sensitive, are doing that, right? So they're sort of being all greeny and we're going to eat lettuce and ride bicycles kind of stuff. Even though we're an oil company, it's all right.
Right.
Um, but not everybody. So it's a matter of kind of passing through, looking at the various equities. The other side of it is this. So a big part of this is this belief that we're going to go to, like, for example, electric vehicles. The mandates that have been put out by governments across the Western world, many of them are sort of 2030. Some of them are like 2025, which is literally just around the corner. And then some of them are out to sort of 2035, 2050, depending. Anyway, they've all basically come out with these, oh, me too type of, one-upmanship, if you will, that, oh, we're going to have, all electric by, or 30% electric by 2030, or whatever the case might be. And so I look at that and I'm go, okay, well, let's play the game. So if that's the case, what does it actually take for that to happen? And I was busy researching all of this, and then I came across a study by a professor at the head of Earth Sciences at London's Natural History Museum.
Yeah.
And so he took a team of researchers, because they looked at what the initiatives in the UK were, right? By 2030, they had all these mandates, and they said, oh, this is what we're going to do. And everybody clapped and, thought that they were wonderful people, and they got the accolades. But he thought, well, I'm just going to go and see how realistic this all is. And bear in mind, this is just Britain, this tiny little sodden island, right? We're not talking about Europe or the US or Japan or Australia or any of these Scandinavian countries that have all put the same initiatives out. And what they found was that, to meet this UK's climate change initiative, they were going to need about 200% of global production of cobalt, 75% of 2018's production of lithium carbonate, 50% of global copper production for 2018. Like, just,
Oh my.
and we're just talking about, again, tiny little Britain.
Yeah.
And then
Yeah.
even if those were all met, it would require over 20% more electricity generation in the UK to charge all these fucking things.
Right.
So I look at that, I'm like, okay, well, that's just Britain. And then you got all these countries, and they'll go, yeah, me too, we're going to do it
Right.
too. Yay. And then I go, okay, well, if that was true, let's have a look at the charts. Let's pull up zinc. Let's pull up copper, and these things are all crashing. And I'm like, what
Right.
the hell? So you've almost got like this multifaceted setup where, on the one hand, we're saying we're going to go down this route. We're going to have, Elon Musk's going to help us, and we're going to have batteries that are just going to power everything. Okay, if that's true, then we're going to need nickel, copper, all this kind of all the inputs into that, and we're going to need them at a massive, truly massive scale. So you would expect the prices of those things to be absolutely screaming, and every miner out there would be just like falling over themselves to try and find some more copper and zinc and everything else. And that's not happening. And then you say, okay, well, if that's not happening, well, we're just going to stay with what we've got, surely. I mean, we haven't. What else are we going to do? I mean, we don't have any unicorn farts yet. So what are we going to use? It's going to be fossil fuels. And you look at the fossil fuels, and they're like, again, you've got these companies who are saying, no, we're going down the renewables path, and we're not replacing reserves because we're trying to meet climate change initiatives and blah, 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 blah. So there's kind of, I guess the answer is there's multiple ways that we're playing it. And I don't really know how this all plays. Well, I have a suspicion how it plays out, which is, fairly horribly, in that it's a wake-up call. But I can be long kind of both sides of it, right?
Okay, and what do you have
really
some
go
names? Do you
well,
have some names on the energy side that you like better than others, like in the I guess almost the unpolitically correct ones?
Um, well, if I delve into the whole energy space or oil space, if we just look at oil, within the oil space, the most decimated sector of all is offshore.
Right.
So it's like more than anyone else, offshore has been absolutely smashed, and so we're quite focused on that. Bearing in mind that we still get 30% of all oil still comes from offshore. So and then you kind of have tangential stuff to that. So you've got things like geophysic mapping companies, right? Because
Right.
again, if you're going to go out and find stuff offshore, like what's the process? So we kind of walk through what is their process, who does what, where, and how. And like you can go back to the highs before, and you had like, I mean, you and I could have set up a fucking mapping company to map the ocean, put together a PowerPoint presentation, and gone and raised like, $100 million if we'd done a decent job of it, right? Because that was the big thing, right?
Right.
And today there's almost none of them left. So they've all, been handed pink slips and either retired to the Bahamas or gone and done something else. And so, yeah, so that's kind of where we focused on in terms of the sort of energy spaces, offshore in particular.
So do you have like a particular company, or do you just like, or you'd prefer just to kind of trade the whole basket of them?
We try and trade the whole. I mean, we try and trade across a basket. Again, it comes back to like my inability to want a stomach.
So what would be the top names? So just like give me the top three names of the offshore asset like stocks that you'd be looking at.
So we quite like Tidewater.
Yeah.
There's some juicy warrants in that.
Yeah, the TDW. That's an old Kuppy name. I think he had mentioned that way back when. And they do have some warrants outstanding on that. How about the PACD? Have you ever looked at that?
Yes.
What is that one?
There's
Pacific Drilling. Like I guess that's
there's
an actual...
DO as well. You can look at Diamond Offshore. Subsea is pretty interesting.
Right. Oh, that's an Oslo. That's a Norwegian company.
Yep.
Okay.
Yep.
Well, there you go. There's a few names, so people can just, people like to have something to look at. Those are the kind of names you're going to look for. We'll talk more in the after hours. Chris, it's been a pleasure having you on. Why don't you tell people a little bit about where they can find you, what you do, and how they can reach you if they want to talk to you some more?
So I run the Capitalist Exploits blog. Anyone can just go there. It's capitalistexploit.at. We've got a research service there, which is actually just built on the research that we do for professionally managed accounts with what's called Glenorchy Capital. You can find me there if you're an accredited investor. And that's just glenorchycapital.net. And that's it, really.
You got your Twitter, though. What's your Twitter account that you...
At capitalistexp. Yeah.
Okay, great. Well, thank you very much. And for those who want to hear more from Chris, make sure you stick around for the after hours, where we're going to learn more about Singapore and what he thinks about the Hong Kong situation. Okay, joining us now, it's that time of the month again, the infamous Kuppy's Corner time. Harris Kupperman, it's a pleasure having you back.
Thanks for having me here.
So I think you wanted to talk shipping.
Yeah, let's go talk some shipping.
Yeah. Something that just, guys amongst themselves do, on a weekend, on a Friday afternoon. Why not talk shipping?
Yeah, well, I guess the first time you had me on, God, is about 6-9 months ago, and I told you need to buy shipping. And then you had me on a few other times since, and I said you need to buy shipping. And hey, it's always fun to do a victory lap, but I was right. You should have bought shipping.
True. You're absolutely right.
And I'm going to tell you should still buy shipping because we're in the second inning of what will be a 2-year bull run, 3-year bull run, whatever it is. And shipping bull runs, they don't stop after a double. And, Scorpio's now doubled from where I told everyone to buy it. But they don't stop at a double. These things go 5, 10, 20 bagger. It's just the nature of shipping. When you start over-earning in terms of owning your vessels, you start making 100% on your capital. I'm not talking about 100% every few years. I'm talking about maybe every few months.
So is the market realizing that this is occurring and basically getting out ahead of the fundamentals improving, or are the fundamentals actually showing up in the numbers? Like, is it a case of the stocks running ahead of the fundamentals, or is this a case where the stocks are basically just reflecting the improvement in the actual industry?
Well, I think the stocks are lagging the fundamentals. I mean, when you think of shipping company, what you're really looking at is two factors. You're looking at NAV, which is pretty easy. What are these vessels worth and how much debt do they have? And then earnings, and the earnings gets tacked onto NAV. You don't value these things on a multiple of earnings, but you value them as a multiple of NAV because you say if this company is going to earn obscenely high returns on capital, maybe it's worth 1.5 times NAV, or maybe it's even worth 2 times NAV because there's no more vessels coming. It's a financing business in the end. And what you're looking at is a lot of these stocks doubled, and they still traded at a discount to where NAV was at the start of the year. But NAV is going up. And yeah,
they're just that cheap. And so you're saying even with the doubling of these stocks, they're still cheap, and it's the mistake will be selling them too early.
Yeah, I mean, look at Scorpio. That's the one I was banging the table about last time. When you had me on and it was at 16 a share, NAV was about 30. So it traded for, 60 cents on the dollar of NAV, 55, 60 cents. Well, NAV is approaching 40 today, and the company hasn't really had much in the way of earnings, but the vessels are going up in price. You can look at secondhand vessel sales. It's a reasonably liquid market, but the price of an LR and MR, these things are all up a few $1 million this year. Now multiply that by 128 vessels and, divide it by 58 million shares, and you see what's happening. Every $1 million a vessel goes up, it's adding about $2 a share to NAV, and these vessels are up a few $1 million each.
So Scorpio was the stock that the CEO recently went and did kind of an all-in move where he went out and bought just outright paid up for options on the actual exchange, like call options, like out of the money call options, which is something very unusual. Usually they're just they're going the other way. They're exercising call options that they get given at discounts. What did you like? What was going through his mind? Is he just that bullish, or do you think he was trying to send a signal and juice it a little bit more? What's your thinking there?
Well, let's analyze this a bit. I've been doing this for 20 years. This might be the first time that I've seen anyone buy call options that are 3-month call options. But at the same time, you also talk about Robert Bugbee, who is one of the greatest stock promoters of all time. If Elon Musk had just bought the 420 call, as opposed to saying he's getting bought at 420, we'd be at 500 right now. Elon Musk's kind of an amateur in this game compared to, true visionaries like Bugbee. Look, he owns millions of shares. He bought $15 million of stock 2 weeks ago. It's not like he's needs more exposure. He was trying to tell the world, look, I'm buying these call options because I genuinely think these are a good investment. And he got what he was looking for. The stock went up $6 in the week after he did it.
So I have a friend/client that's got into these shipping stocks in a big way, and he asked me to chat with you about one particular kind of aspect. You love the Scorpio tankers. That's your favorite pick. But yet, I think when you had spoken to him, you had put him onto this research analyst that writes on Seeking Alpha. What's his name?
Jay Mintzmeyer.
Right. And when he went and subscribed to his research service, he found that Jay doesn't like Scorpio nearly as much as you. And he had some other names that he also kind of recommends more highly. Why do you think that Scorpio is the kind of go-to stock that you should be long on this? And what do you think about the others? Are you bullish on those just as much, or is it just a matter of like you're buying the big one that that you feel is going to participate the most? It's the most liquid and the most safe.
So I guess you have a couple of factors. Let's start with the fact that I'm super bullish on product tankers. IMO 2020 kicks in about 6 weeks, and demand for low sulfur fuel is going to go up by 2-3 million barrels a day. And only clean product tankers can transport that, and demand for their business is going to go up quite dramatically. You also have one of the largest refineries in the world coming online at the turn of the year, which will add a dramatic increase in export capacity of refineries. It's in the Middle East. So I'm just bullish product tankers. When you look at the various product tanker companies, they all have hair. This is shipping. You're dealing with bad people. You're dealing with bad managements. You have a lot of problems. So you have to look through it and say, which sort of risk do I want to take? And then you also have to look through it and say, what gives me the most upside? Jay Mintzmeyer is one of the smartest guys in this industry. He takes a very analytical approach and says, who has the cheapest fleet that I could buy? Because if product tanker values go up and if charter rates go up, the guy with the cheapest fleet has the most leverage to what's going to happen. I look at it and say, this is all a big game of fund flows, and fund flow is going to go to the most liquid guy. And when you look at the other players, there's Diamond, there's TK, there's Navios, there's Torm or D'Amico in Europe. I look at these guys and I say, who's the best stock promoter alive? And Robert Bugbee is my hero in that regard. He gave a podcast this morning, and he sat there for an hour and told you basically why you should buy him and no one else. And well, it was at a shipping conference, and you see the other podcasts, and the other guys talk about sort of innate things that are useful to showing how they know about the business. But in the end, Robert Bugbee made me want to buy stock, and everyone else kind of made me think, that guy, I'd maybe hire him as like a mid-level employee. You go with the fund flows, and don't forget, when you're at a bear market, you buy the cheapest vessels. We've been in a bear market for 10 years, so you always want to go and cycle between what's cheapest. In a bull market, sometimes you want to buy the most overvalued guy because they're going to do creative things. If you look at, say, Frontline, which is a Fredrickson company, everyone always says it's overvalued. Yet Frontline continuously does smart things with their shares to buy up other guys that are undervalued, and they create a ton of value by being overvalued, which is why the equity markets are willing to give that guy a currency to work with, because he consistently does smart things on the way up. He blows up on the way down, but he does things on the way up that are smart. Yeah. And I think Scorpio is going to do stuff on the way up that's smart. Look, they just bought a very large fleet from Trafigura about a month ago. The fine guys at Trafigura, who definitely aren't stupid, they agreed to be paid in Scorpio stock. I think Scorpio may have overpaid ever so slightly for this fleet. But what they've done is they've further consolidated the industry. The industry of LR2s is one of the most consolidated segments in shipping. It's like OPEC. And by continuing to consolidate it, you can basically do better triangulation and get better charter rates, but you can also extort the Vitals of the world. So I think he's doing smart things, and he deserves a better currency, and I'm willing to pay up a slightly higher multiple. Put it that way.
So yeah, that's great, and it makes a lot of sense. It actually reminds me of the story of way back when, and I believe it was in the 80s, there was a guy on one of the market wizards. He got bullish stocks, and he went and he gave his buddies some money to manage, and the guy went and bought all these value names and all these cheap stocks, and then the stock market was roaring ahead, and he went and looked at his account, and he realized that it wasn't keeping up with the market, and he said, "What are you doing?" And he says, "Well, I'm buying you all these cheap stocks." He goes, "No, I don't want those." And so what he did was he found a couple. He went to a brokerage office, and he says, "I want your two youngest brokers." And he told them very succinctly, he says, "I want you to buy the stocks that are the most expensive, and I want you to keep buying them and do this and stuff like that." And he ended up making a fortune on it, and it's very much the same kind of
buy me fraud.
Yeah, so I completely understand.
I've just seen this in shipping. I saw this in the Great Uranium Bull Market. I've seen this in lots of these little niche esoteric bull markets. You want to be with the guy who's the best stock promoter and the guy that all the fund flows go to, because you end up with one industry leader in a lot of seconds, and the industry leader keeps going. Think of the dichotomy between, Bitcoin and every other crypto. There's only one. It's the same concept.
Yeah. No, that makes complete sense. Now, in terms of the exposure and how much uptake this is getting, and you mentioned that you think that this is just starting, do you see the hedge funds climbing in on this name? Is it becoming a little bit of Hotel California? Are you worried about that aspect of it at all?
Oh, it's definitely Hotel California. It's horrible. It's the worst hedge fund hotel I've ever seen, this one stock. I just had a guy call me out of the blue about an hour ago. We talked. I probably shouldn't say which firm, but it's about a $500 million firm, and they knew nothing about shipping. Super nice guy. They run a healthcare fund.
Right. And so they're now looking at shipping because they just see this stuff running, and they got to get in.
Yeah. I mean, look, when healthcare starts doing shipping, uh, it kind of makes you do hey, wait a second. But then you realize that no one's really talking about it. When was the last time Kramer had someone in the shipping industry on TV? And it's not like charter rates are going down anytime soon. I mean, literally in 6 weeks, demand for LR2s is going to go up by like 15-20%. And then a few weeks after that, this refinery comes online and demand goes up again. And what we've seen is supply actually decreasing because I mean, I should make this point to you for your readers. There's lots of vessels of class, different vessel classes. And LR2 it has an epoxy liner and it carries clean cargoes. And what you have is like Aframax, which carries dirty cargoes, which is unrefined crude. So when Aframax rate spiked 2 weeks ago, a lot of guys who had clean tankers said, screw this, I want to get paid more. And they went dirty, which they basically took their vessel out of the clean trade. You can go from clean to dirty, but it's really hard to go dirty back to clean. It's a multi-month process and costs a few $1,000,000. So what's happened is that the actual fleet of LR2s has shrank quite considerably. I've seen different numbers, and I don't actually believe any numbers I see in the shipping industry, but it's probably shrank somewhere more than 5, less than 10, at a time when demand might go up 15, 20 in the next 2 months. Like LR2s, which had been trading most of the year at like 15,000, hit 100,000 last week. They've backed off a bit to about 40, 50 today. But, at 50,000, Scorpio, which is a $33 stock, is going to earn $25 a share. I mean, just put that all in perspective and realize that the good thing that I'm betting on owning this stock hasn't yet happened. This is all just guys doing dumb stuff, trying to make some extra money along the way. I mean, I think one of the rare things you see when you make a bet, and I saw this with my uranium bet 10, 12 years ago in uranium juniors. I mean, you make a bet on a macro event. Oftentimes you end up being too optimistic and you get it sort of wrong and you think you have a 10 bagger and you make 30% and you're like, that was okay, whatever. And then every once in a while, the trend plays out better than you expect, like with uranium where you had 2 large mines flooding and it just goes parabolic. And what we've just seen with product tanker shipping is that all these LR2s just went dirty and charter rates went parabolic. It's actually paying out better than expected, which is probably why Robert Bugby's buying call options.
That's right. Yeah. So now when you kind of think about this, are you trying to close your eyes and just not like think about, is there any point that you would say, oh, this has gotten ahead of itself over the short run and I take some off the table? Or is this a point where you're just, even as it rallies and it doubles in your face, you're just like the tough trade is going to be hanging on. And that's the often the tough trade is the bright trade.
I had a really smart friend, this is like 2003 when I first started buying gold. And I bought some gold futures at 330 and I started buying the equities like 350. And at the time, most of these companies were losing globs of money and they traded at like fractions of replacement cost. And as we all know, if you just bought a basket of gold juniors in 2003, even with all the ones that didn't make it, you probably made 10 or 20 times your money. I know this because I made like 10 or 20 times my money on these things. And I had a friend who they went up about 20%. And he's like, well, I'm going to take half off the table. I'm going to buy the pullback. And there was no pullback. And it went up another 20%. He took the whole trade off. And then for 5 years, he watches these things go up like 10% a month. And he's like, man, I don't think it's going to be a pullback. And I'm like, nope. When you catch one of these tigers, and you get to catch one of these a few times in your career where you just know you got it. And I've been following shipping for 20 years. So like, it's not like this sector just came to me all of a sudden. I've just been following this thing. But when you know you got it and things inflect positively where your thesis gets better along the way, like the only thing you could do is hit the sell button. That's the only way you can screw it up.
Right. It's the only way you can screw it up, by hitting the sell button.
And the best thing you can do is turn off your phone, turn off your computers, and just go backpack in New Zealand for the next, 2 years. Like,
well, like, isn't that the truth of the matter? Because isn't the hardest thing often just sitting? And back to Jesse Livermore often said that the big money is often made sitting.
It's just sitting and not screwing up.
That's right, not screwing up. So there you go, over trading it and trying to catch the 5% swings is what's going to hurt you here, according to Kuppy. Oh well. Great update. Thank you very much. Now, Harris, Patrick's gone and split on me, and he's out vacationing in Florida, and now he's in California. I was wondering if I could convince you to stick around and do the rest of the show with me. What do you say?
That's some big shoes to fill, but sure.
Okay, that's great. Well, thank you very much. Okay, so let's go then. Let's give this a whirl. We're going to go and we're going to try This Week in Trading History, which is Patrick's favorite section. And we're going to talk about this day back in October 25th of 1923. And I know that that Patrick, if he was here, would give me a hard time about that. I can remember that day, but that was even a little before my time. But for those that are of the kind of hyperinflationist kind of ilk, they'll know this period very well, because back then, this is when Germany printed 100 quadrillion marks.
That's phenomenal.
Like when you see this, like I have a picture on the screen here of a $100 billion mark. And I was just kind of like, this is like 100 billion. And like,
did Zimbabwe get that far? I have some stim notes in my dresser drawer.
Like,
I think they only made
really?
it to. Yeah, I think they only made it to like $1 billion though.
Yeah, so it's just the hyperinflation. And one of the things is I always give the Germans a hard time because their obsession with not doing any fiscal, even with their negative rates, is kind of just drives me crazy. But the reality is that when I go and look and realize how bad this was, how crazy this inflation was, it kind of gives me a little bit of more of a context of why they are so vehemently against inflation of any sorts. So let's just kind of like go through here. People don't realize it, but the German Weimar Republic was actually, the inflation was caused from the problems resulting from the First World War. And unlike France that went and did an income tax to pay for the war, the German emperor decided to fund it all through borrowing. Now, people are going to be like, hey, wait, doesn't that sound like the current environment? But as they did this, they went and they devalued the currency from 4.2 marks to 7.9 marks until eventually it hit like a billion marks to the dollar. And it was just kind of shocking to me. I went through here and I have pictures. So this was a 100 billion mark note. You'll look here. This is the 500 billion mark note. And this is the 5 trillion mark note. And not to be done, there is one more, just oh no, that's it. The 5 trillion was the top. Sorry, I'm not quite as on top of my trading history as Patrick is here. But anyways, the one thing I wanted to kind of talk about was the fact that this kind of inflationary mindset that the Germans have is rooted in this idea that they saw their wealth get just destroyed. And when you think about the how do you actually protect yourself in that sort of environment? You can't.
No, you can't.
You're stuck. You have to own real assets, is the truth of the matter is, because it's like the prices are doubling on you every day.
There's a great book actually written by a guy about 10 years after the event. It was written in German and then translated to English. But it really explains what was happening back then. Mark Faber has always been, writing about it. And, you'd think hard assets are good for you. But when you look at it, a lot of guys who owned property, they came out a little better than the guy who owned, marks and a savings account, but not so much better because, other things went up really fast and your rent stayed constant. Basically you're getting paid rent in a 5-year lease, and then you own this physical property, but then your property tax and your, insurance and your utilities keep ripping, and you're as upside down as the guy who had, a bank account. It seemed that almost everyone got hurt at every step of the way, except a couple government officials that played the game. And a lot of the hard assets that people keep talking about now that they ought to own, they didn't actually give you the sort of protection that you'd think they would give you the protection. It's more like you just need to turtle up and own some gold. And when the game stops and they go back to normal currency, you have this gold and you can go back out there and restart your life.
Yeah, that's one. The other one that Barton Biggs, he has a famous book, Hedgehogging. He looked over time at different things that saved, that was a store of value. And he came to the conclusion that actually small farmland was another one that did very well.
That's a good one.
Yeah, because you wanted small farmland because the trouble was if you owned large farmland, it got expropriated on you. And, if you think about you're a French farm owner and the Nazis come in, they go take the big ones, but they probably leave the small ones for you because they need the product and they're not going to bother with you. So he kind of came to the conclusion that was another great store of value.
No, that's actually interesting because when you have hyperinflation like this, it's because government has gone rogue. I was in Zimbabwe and we met with one of the largest banks, like just call it Bank of Zimbabwe, but it probably had some other name. And we met with the CEO and we were talking about lending. And this was like a month after they stopped with the Zim notes and dollarized the economy because the whole thing stopped working. So I went there with some hedge fund friends thinking we'd find great opportunities. I'm talking to this bank and he takes me to a warehouse and they have a bunch of like half-used, banged up washer machines and microwaves. And he's just like, yeah, we took our entire deposit base and we invested it in whatever we could that was not going to depreciate. So we ended up with these microwaves and washer machines, and we have like used Priuses and like all this nonsense. And we don't make any loans. We just take deposits and buy Prius. It's just kind of like, okay.
Seriously? That's what they owned?
It was the largest bank in the country. Yeah, no, they had the most branches in the country, and I remember like just talking with this guy, and I didn't believe him. It takes me to this old like Rhodesian warehouse, it used to be like a tobacco warehouse or something, and it's just full of microwaves. And he's like, "Yeah, we got a couple shipping containers of microwaves. It's the only thing we could grab. Everyone already grabbed the good stuff." So we got these microwaves, and they're sort of was a microwave depreciate like 5% a year, 10% a year. It doesn't really go obsolete. And it's just like it was the best thing we could get with these depreciating Zim dollars. And we're just going to sit on it. And I remember the stock trading at like 4 US cents down from the equivalent of like $20. It had previously been a multi-billion-dollar bank 30 years ago.
Right.
And now they just had washing machines.
And so did you invest in it, or was it just like it was uninvestable?
It was uninvestable. We were there. Actually, I was there, and we were supposed to that night leave. I was meeting my wife at Vic Falls, and the national airline declared bankruptcy that day, which seems to happen about once a month in Zimbabwe. But anyway, my tickets went poof. The money I invested in those tickets gone. We found a driver who'd take us. We got about 100 miles outside Harare, and the car caught fire. And I wasn't going to let my wife go to the airport in Vic Falls by herself, having never been to Africa. So I just said, to hell with it. I'm going to go find my way there. And I hitchhiked my way. I sat in the back of a car, of a tiny little Prius with some quite friendly people, and we sang gospel for the next 8 hours.
Well, there you go. So this is what happens with hyperinflation. You end up in the back of a car singing gospel for 8 hours. So watch for it.
Yeah.
Well, thanks for those stories. That's great. So let's move on. We're going to go do this new part. We're going to, Patrick's away, so I've kind of taken over the controls. And as you can tell, I don't do that good a job researching things as Patrick does. He spends a lot more time prepping the show. I'm going to do something. I'm going to bring back something I call the trading couch. And one of the things that I definitely believe is that trading is the mental game is very important. And I think that too often when you get on Twitter or when you read people's, recounts of their lives, all they'll do is talk about the bad trades. And I think that talking about all they do is talk about the good trades. I think that talking about the bad trades is important, and passing along some of this information in terms of learning, helping people avoid the mistakes you made. And not only that, for you to realize that these are the problems that you're susceptible to. So, Harris, if you're up for it, I ask you to take a seat on the trading couch, lie down if you want. And let's talk about some of the things that you do wrong, or some of the things that you battle with in the trading game.
All right, Doc.
Okay.
Yeah, look, trading, in the end, you don't have to be very smart to see a cheap stock. It should be obvious, and if you have to build a model, it's not obvious. And what stops people from buying cheap stocks and then sitting on their ass is their brain. It's constantly working and trying to force you to do dumb stuff. And you have to overcome that. And the winners of this game aren't usually smarter. They're just more disciplined. And everyone has their own way. Yeah, everyone has their own way of doing it, but you got to be disciplined. You got to have rules, and you got to follow those rules.
Yeah, I completely agree. That is I always say to people, you know what? Everyone has their own rules, and they need to figure out those own rules, the stuff that they're comfortable with, and then they need to be true to them. And that's where you fall down, and it's so hard. Like I have my rules that I write, and then I go and I break them like an idiot.
We all do.
Yeah,
That's why we're not billionaires.
Yeah, exactly. And even when like you're almost like it's like a junkie that's like looking for the next shot of heroin. You're like, why did I do this again? And you could be, as you get smarter, you just realize that your brain figures out slightly different ways to break the rules. Like I joke and say that all I bring to the party is 25 years of mistakes. I just seem to figure out new mistakes to make.
But that's already a skill, because if you make the same mistake twice, then you're not creating value. If you find new and creative ways to lose money, then you are advancing.
Right. So now, what are the things that you struggle with? Do you have things that you are particularly prone to, like the cheap stock kind of? I end up buying too much of it, and I see that you wrote an article today about, or maybe it was yesterday, about Tesla, and how you said. You basically said, that's it, Elon got me, I'm out of it. And I thought that was pretty disciplined of you. I thought it was actually very big of you as well to write the article saying that, I tried this, it didn't work, and I'm updating people. And that's too often people that have bad trades seem to just forget about it and not follow up. So I thought that was a really great article. Is that something that you find yourself doing too much of, like selling trying to time the bubble stock and short it to be the hero?
I'd say if you look at my trading history, the thing I've lost the most money out of anything is shorting stocks. I don't know why I short. I went 10 years without pressing the short button. And about a year and a half ago, thank God I didn't short. I only, bought some puts. But I just said, this thing is a fucking fraud, and I'm going to short it. And to hell with Elon. This thing's going to die. And, and then I started making money on my Tesla puts, and I started being like, I'm going to go find some other Ponzi frauds. And I started shorting some of those too. And next thing you know, I lost a decent chunk of money. It's look, in the end with Tesla, I was up, 600 bips. And when I closed the trade down 300 bips, like it's a big swing, day to day. But, in the scheme of my fund, and I'm a fund that usually has 5 positions be 80%. I mean, having a high single digit down day is kind of, it's called what happens once a quarter,
right.
Once every 6 months. It's not life changing or anything. And, and it's the swing, the actual crystallized loss, which is the thing I'm focused on, was like 300 bips. Like, who cares? But when I closed that out, I started looking at everything else I'm short, and it was like Peloton, Chewy, like, the hell do, like, it's kind of like shades of Tesla still. Like, so I just said to hell with it. Smile Direct and all this nonsense. I just got out of it. And, talking about this discipline thing, well, let's talk about shorting. Like, I don't know why I started shorting. I've found that when I have an amazing run where, I've had back-to-back years, I'm up 100%. I'm always going to not just step on one landmine, but I'm going to go to like a minefield and just kind of like tap dance around until I hit a few of them. And I've had a great run, and this year hasn't been so great outside of shipping, and I think I was kind of due for it in the end. But talking about the discipline, when you get a core position, and for me, a core position is one of my top 5 positions. When you get it wrong and you get out for a loss, the worst possible thing you could do is say, I'm going to work harder and find something else and make it back. Because you're inevitably going to put something on when you're not ready, when the timing's wrong, you're going to try to make it back, and you make the problem so much worse. So what you do instead is you book all the things that you're not completely confident in, which is, as I said, the Chewies and the Lyfts and the Ubers and Silicon Valley and OZK and all this crap that I'm short. And after you've booked it all, you go to a place where the internet doesn't work too well and no one's going to call you. You turn off your phone and you just go have fun for 2-3 weeks. And look, if something bad happens, I'll see it because I'm disciplined. I check the news in the morning for 20 minutes. But, when it's 9:32, you turn off and you go to the beach or you go hiking or you go see some historic stuff. But you got to be disciplined. You got to get out of the office. You got to stop looking at stocks. You got to have a refresh of the brain. I have a very good friend of mine who got into a terrible trading rut, and he turned a decent chunk of money into zero over about 3 years. And I just kept telling this guy, dude, you got to get away. Like, I'll buy you a vacation. Just spin the globe. Tell me where. I will pay you and your wife, go first class, stay at nice hotels. You just got to get away from your screens. And he's like, no, I'm going to make it back. I feel this one's the next one. That he literally turned a lot of money into no money, and he's a disciplined, successful trader. And it's just so important to have a reboot when you get one wrong. And
yeah.
I mean, my year is actually reasonably okay, but still, I got a top 5 wrong, and it's time to reboot. If you're not disciplined about that, when you're having a negative 300 bips, then when you have a negative 1,000 bips, you're going to turn it into negative 5,000.
Right. So I have a couple of things to say to that. First of all, I think I need more friends like you, Harris, offering to send my wife.
I'm going to Antigua tomorrow morning. I'm going to Antigua, 9 a.m. Why don't you get on the plane with me?
But you're sending your good friend that's having a trading rut. You're saying I'll pay for it. I'll be like, I'm having a terrible trading rut. No, but I completely agree. The other thing is that I too find myself when I'm up. That's when I get dangerous, because I start to think, oh, I'm playing with someone else's money, and then the very things that made me up, like the skill that made me up, all of a sudden disappears. Meaning, like, if I go, I'm a good chipper. I can just chip, and I'm just not I'm not the kind of trader that's going to go and have like 100% position, like 100% up in one position. I'm more likely to do a whole bunch of 5s and 10s, and if I did have a 100% year, it would be very steady, as opposed to like the kind of trader that will just go and be even, up 10, down 10, up 50, down 10, plus another 40 or something. You know what I mean? Whatever the number is. So I'm more of a chipper, and I find that when I chip and I go, so like I'm chipping away and stuff, and then all of a sudden I start to think I know something. The moment I think I know something, I know I'm in trouble. And like I almost need like the little devil on my shoulder telling me when I'm an idiot. Like, no, Kev, you don't know anything. You don't know anything. And that's when I trade better. I kind of laugh and say I got my wife at home to tell me I'm an idiot, but I need her at work telling me that no, you don't know anything. And I think that feeling, like you mentioned the fact that you were up and that it ends up being, you almost feel like you're due for it. It is a problem a lot of traders deal with. Like I've heard of guys. Sorry, go ahead.
You're always going to screw up when you're having a good up year. I mean, last year I was up like 60 or 70 or something like insane in October. And I'm like, let's go do some offshore drillers. Like, and, and then it starts going against me. And I'm like, well, I'm still up 50 on the year. I'm still up 40 on the year. Instead of looking at it and just being like, look, oil's crashing. These offshore drillers were in the money, were at the money basically when I bought them. Now they're out of the money in terms of the oil price they need. And let me just stop the hell out. And I'm thinking, I'm up 50. I can give it another 500 bips. And next thing you know, you're up 20 on the year, and you're like, well, that was dumb. And thank God I cut out, because these things all dropped by like 2/3 from where I cut them. And I kind of gave my year back. And I mean, I had a great year. Like last year, as I said, I was up like 60, 70. And the year before, I was up over 100. In like an 18-month period, I had a triple. And I had to give a third of it back. It's just like, and it's one of the hardest parts of this industry is, you have to kind of, I guess, give some charity to the less fortunate investors sometimes.
Well, the other thing you need to almost think about is never think about that thinking where you said, I'm up 50, I can afford to take a risk with 10. That's got to go away. You just cannot do that, and that's the real problem. And I suffer from that as well. What made me get up 50. All of a sudden, I changed my trading so that it's no longer the same reason that I'm up 50. It's some new reason, and I'm taking way more risk, and then you inevitably end up selling, at the wrong time. So I completely agree. But I think that really the lesson to take away from this, from everyone that's listening, is that you need to be disciplined about, you have to figure out where your strengths are, what your weaknesses are, and then you have to put in rules and you have to follow them. So even though you do have some volatile swings, you're smart enough and disciplined enough to actually cut it out. And I am actually thinking that this Tesla is a great example of you doing something that's unusual for traders. Too often I'll see guys that spend the rest of their career just fighting it, right? Like you're basically licking your wounds and saying I'm off. There's better battles to fight. You might still believe that it's going to be a zero, but you're like, why spend the time and the energy trying to fight that battle?
So like with Tesla, okay, so I saw the press release. I started reading through it. I listened to some of my friends, none of us understand how he beat the number. We have really good insight because there's so many people following this thing. And I really do think that Musk had his Draghi moment where, sometime this week, last week, he kind of said, I'll do whatever it takes. Like before I played with some accruals and I, massaged some things around. And now I'm just like full frontal fraud. I will just make shit up going forward. And when it's a good friend of mine who emailed me this morning. He's like, Kuppy, you're so right. Like, look at Einhorn. He fought that other thing for 10 years, wrote a book about it, made no money. Like, once these guys decide that they're a full fraud, it can just be a more full fraud and a more like you just go down this sort of slippery slope and then you're full on fraud. And like, how do you fight that? And
yeah.
But
that's
look,
a great book, by the way. That's an awesome
it's a great book. Fooling some of the people all the time. I've read it twice. It will make you a better investor. But going back to the Tesla, like I kind of got drunk on Wednesday night and said, the fuck am I doing with this thing? I'm going to go find the next shipping play where I can make 10 or 20 times my money and not fight over Tesla. And I just said, I'm covering on the open. By 9:35, I will book all my options. Whatever the price is, I don't really care. I'm not going to massage the trade. And I booked it. I got about 295, basis where I booked my options. Here we are at 330. So, yep. When you have a loss, you take your loss. Discipline, man. Discipline.
Well, thanks for sharing that with us. You can get up off the couch. And we'll go on to top 5 things to watch next week. But before we do, we actually go through the top 5 things of last week. So I know you weren't here when we were talking about these, but I'll pretend that you're Patrick and we'll go through them all. Okay, let's do the first one. Aerospace and defense. Is the rally done? I think that Patrick is a big believer that Boeing is headed lower. Do you have thoughts about Boeing?
One of my smartest friends is short a hell of a lot of it, and it's caused him a lot of angst, and he's absolutely convinced he's right, and I don't think I'm smart enough to disagree with him.
So he's a seller. He just thinks that the problems with this 737 MAX are bigger and that this thing is going to be offered for some time.
Have you ever seen a company kill 300 people and then be like, don't worry, we got it. We'll just increase the buyback. Like the whole response is so disproportionate to what they just did wrong. What they should do is fire the top 5 people in management, say we're super, super sorry, say we're going to stop producing planes rather than warehousing these things, hoping that we can bribe the FAA into letting the planes fly again. And just be contrite and said, hey, guys, we screwed up. And, we've seen companies screw up before. And Boeing is just kind of like, nah, we got this one, guys. More buyback.
Okay, well, there you go. That's pretty awesome. Okay, Amazon earnings was this week. And actually, it was one of the few names that had some trouble, right? Like it was a big gap lower, and yet the stock market doesn't seem to matter, and it's back up now. We're sitting here at 1756. The initial dip was down to 1700, and I don't know if that's Mark Cuban buying more after the earnings or not.
I don't know what makes any of these large cap U.S. equities tick. This is a question for you. This one's outside my league. I don't get it.
Okay, well, I don't know either. I that was actually Patrick was a big Amazon fan, so I don't know. It doesn't look like it's like this is that bad a deal, so it looks like we're headed higher is all I can say. Number 3, the ECB press conference. So I guess it was a little bit of a nothing burger. Nothing really happened. Draghi got to ride off into the sunset in his last kind of hurrah. I don't have anything really to add. The euro, what do you think of the European currency? Do you think we're headed higher or lower from here?
Well, I'm a dollar bearer, so I think the euro goes higher. I think everything goes higher against the dollar.
My God, this is awesome, Kuppy. You, too bad Patrick wasn't here to argue with you, because all I'm going to do is say hallelujah. I completely agree. I think U.S. assets are extremely overowned. If you go think about it, the stock market's been the best performing stock market for the past 5 years. The currency has been going up. You can't help but be overweight European financial assets. Like, you'd have to be a fool to not be.
Kev,
so there hits. Yeah,
when was the last time? When was the last time one of your? Sorry. When was the last time one of your friends called you up and be like, "Dude, you just got to buy some, out of the money euro calls"? Like,
yeah, nobody. Like, I completely agree with you. This is one of the greatest trades out there in terms of risk rewards, because it's one of these things that if I wrote up a piece about that you got to be long European, like euro or basically any other currency, I would get shouted down like something fierce. And those are the times that you know that the crowd is all in, and it's just setting up to be a great risk reward. Anyways, number 2, oil. One of the things that I joke about is there's no such thing as a triple bottom. You ever heard that expression? So
no, but I like it.
Yeah, because like, how many times have you seen something and you're like it hits by the time, like, it might be double bottoming, but by the time it hits the third time, it's just like it's getting so heavy that it just eventually cracks. So one of my jokes is there's no such thing as a triple bottom, but so far I'm wrong. We did bottom here. We had $50 in June, $50 in August, and then we had $50 again in October, and we seem to be rallying in my face. It's headed higher over the short run. I'm not sure if that's going to continue. What do you think about oil?
I mean, look, the global economy is collapsing. At the same time, Baker Hughes took 20 more rigs off this week on the Baker Hughes rig count. I don't know. I mean, basically, who's going to win out? Global economy collapse or supply of oil collapse? Because in the end, supply of oil is just kind of tied to Ponzi math. It's kind of like WeWork, you know. We're going to put $1 in the ground, get 70 cents out, and hope to make it back in volume. And like,
I don't think the global economy is collapsing, though. I think that you're going to be surprised that the global economy does better than people are expecting.
I would be surprised then.
Yeah, well, there you go. So at least we can disagree about something. Okay, number 1, the Brexit vote. This is a case of just like, I said that at the time. It was we taped this Friday afternoon, and it was going into this again. It was a weekend vote on Saturday, and I said I love owning foreign exchange volatility, but the British pound vol was bid so high. I told Patrick that I had to short the vol going into the weekend. It ended up being a good trade because once again nothing happened. I think that we're going to be kind of old men in our rocking chairs, and they're still going to be talking about whether they're going to exit Brexit. What do you think of Great Britain?
I think you're exactly right. I think this will go on for another 20 years.
Having said that, I am a huge bull over the long run because I think that the actual pound is dirt cheap. I think I look at people that are buying, British real estate again, London real estate, even though it is expensive. I understand that, but you're seeing money flow back into it. I think you're going to wake up and the pound's going to be 25% higher even without a Brexit resolution.
I could see that, absolutely. I mean, it's one of the most hated currencies, most beaten down of large currencies. Yeah, it's cheap.
Yeah. So we're going to end up with our last one, which was the Canadian elections. I know you're not a Canadian. You didn't know anything about it. Suffice it to say, it was boring, just like most things Canadian. Trudeau won a minority government, but the Conservatives, did really well. The one thing I will point out, for those who aren't aware of our kind of subtle politics that happen in our country, we are getting a situation where the chances of Alberta separating are going through the roof compared to where we were before.
Really? I didn't know that.
Oh, yeah. Listen, if you go look at the transfer payments from the different provinces, Quebec is the largest recipient of federal funds, and Alberta is the largest outlier of funds. So they go put money into Canada, and then Quebec takes. Now, let's stop and think about the next part. When you go look at the votes the number of seats per 100,000 people, Canada as an average is 0.9, meaning that for every 100,000 people, you get 0.9 of a seat of a member.
Because Canadians are not worth a full person.
Yeah, exactly. But the thing is, when you look at the provincial breakdown, Alberta is actually the lowest, and Alberta is at 0.78. So we have a situation where Alberta is underrepresented on the federal level. They're putting more into the coffers. And then not only that, they're getting told by the rest of Canada that they're not allowed to make pipelines because of, quote unquote, green movement. So
right. I mean, it's ridiculous. I see all that. And Trudeau might be one of the dumbest people ever to be the leader of a country. I mean, I didn't know you guys had elections. Quite honestly, I had no idea how Canada even functioned. But the fact that
you thought, whoa, 1 second. You thought we were a monarchy? We just passed it along.
well, I just, I guess, yeah, you have elections. It's democracy. I mean, you know how often I think of Canada? I mean, I have a Canadian public company. I probably only think of it about once a quarter. But the fact that a surprisingly large number of Canadians voted for Trudeau, I think it says something about Canada.
Well, unfortunately, I'll tell you one thing. Americans are very suspicious of leaders who aren't religious. And Canadians are suspicious of leaders who are religious. And so you find like somebody like Bill Clinton who has to go to church to be elected. I don't buy that he goes to churches like that. He's doing that because he really wants to. I think he's doing it because for political reasons. I might be getting myself in all sorts of trouble mixing both religion and politics in this discussion, but that's never stopped me. So I'll just keep going. But you go look at Canada. Stephen Harper had to hide the fact that he went to church because we just don't want to mix our religious with our government. And unfortunately, the reality is that the Conservatives went and put somebody in power that was very religious, and it was very difficult for Canadians to get their minds wrapped around there. I think they missed a huge opportunity because I think that they put a woman in there, a woman centrist. She would have walked away with it. She would have walked away. It wouldn't even have been close. Like, I think the Conservatives could have won it hands down. They just put a woman centrist in there, and it would have every Canadian would have voted for her. Because I agree that people don't realize this. Trudeau had lower approval ratings than Trump going to this election.
That's not hard to do.
Well, lower approval ratings, less people liked Trudeau than Trump. That's how bad it was. Anyways, that's enough for boring Canadian politics. Let's go on to the top 5 things to watch next week. Oh, sorry.
Canadian politics. So I have a very smart friend in Canada who is very big in the oil industry. And he, I guess, told me maybe 6 months ago I should buy some Canadian dollar because Trudeau was getting kicked out. And Canadian dollar has been 75 by 76 for the better part of, forever. And I just find it interesting that Trudeau actually won, and here we are, and Canadian dollar is 76.5. It's actually appreciated when the bad news happened, and it goes to show that I think the dollar is a great short because here you have bad news for Canada economically, and dollar still appreciated, Canadian dollar.
Yeah, I don't know why your buddy thought that because I don't think it was ever like
he lives in Alberta.
Oh, there you go. Well, and if you go look at it, basically they all voted Conservative. The whole of Alberta and Saskatchewan voted Conservative. I'm from Manitoba, so you can hear kind of my Western bias, seeping through. But I kind of think to myself, it drives me insane that we let the Americans. Our oil trades at a $20 discount to yours. And so we ship it to you by rail or we ship it to you in the few pipelines we have. We let you guys do all the refining. We let you earn that spread. And then we also let you guys tell us that we shouldn't develop our oil because of green movements. Meanwhile, you guys are basically fracking the shit out of your country and, having a bonanza and making all sorts of money on that. And nobody's stopping that. And in fact, it just drives me nuts because I find too often the Greens don't think about the consequences. So they stop the pipelines, and then what happens? It gets shipped by rail. So rail is actually more dangerous. There was this terrible accident in Quebec or Nova Scotia, I can't remember, where like 50 people died because a train got out of control and blew up, and it was all filled with oil. And so they just ship it by rail, and it ends up being that they don't actually achieve their goal, which is to get people to use less oil. And to me, it seems really clear cut. If you want people to use less energy, tax that, not try to cut the supply. And it just drives me nuts because it's like if you have a problem with drugs in your society, you don't go and say, well, what we're going to do is try to get rid of all the drug dealers. Because all that happens is you just increase the price of it doesn't change the demand. It just ends up it just moves it up a little bit in terms of the price that people pay. And the moment you arrest one drug dealer, there's someone else to come there do it again. Anyways.
Right. I mean, look, I'm all for the environment. I consider myself a green, but I've been in the real economy and the real world, and you need real world, real economy solutions to solve the problem. And I find a lot of the green solutions actually are counterproductive because they're, designed by people who've never been in the real economy themselves. Politicians, professors. They think things should work, but then they don't work how they want them to, and they make the problem worse usually.
Yeah, and listen, I don't want. I'm probably have now just made everyone think that I'm some sort of Luddite that is in the big oil's back pocket. I understand, pollution is bad. I just think pollution, trying to stop the pipelines is not the proper way of going and addressing the issue, and there's a lot smarter ways to do it. So, and it drives me insane that Alberta gets such a bad kind of. Such a bad hand in the Canadian environment, and it wouldn't surprise me at all if they end up talking about separating, and they're not the kind that are going to just talk about it, and they're like, it would seem to me that they might just do it because they actually are the ones that are paying for more of Canada than we know. But anyways, let's go on to the top 5 things to watch next week.
All right.
Okay, number 5. Apple earnings on October 30th. Do you watch this? Do you keep your eye on
Yeah, absolutely. Apple, I don't know why, but almost every quarter, the top for that quarter is the Apple's earnings. And Apple, they massage the number. They do whatever they do, usually gaps up. And usually the day after Apple earnings or the day of Apple earnings, if they miss, that's the top for each quarter. I don't know why it is, but it just always seems to be.
Okay, well, there you go. So we'll watch for that to continue. Number 4, will McDonald's, Visa, and MasterCard continue to roll over? I've been watching these names. These are kind of some of the names that I like best because I view them as the go-to safety stocks that people have been hiding in. And I noticed that they started to get weak, and we're getting a rip your face off kind of rally this afternoon, and I don't even actually know what happened. Do you know why we rallied from 9:30, like just straight up?
Oh, there was some more news. We're friendlier with China this last hour.
Okay, whatever. So it's more of the same shit. It's a Friday, and they have to put money to work is basically why we're up. So I've been watching this because I thought that these were the ones that were going to roll over. They don't seem to be rolling over that much because of the strength in the whole market. But the question is, are these the canary in the coal mines that you should be watching for? That's what I think I'm watching. Yeah, no, I think
there's a lot of large cap stocks that are breaking down where, they've just been propped up by buybacks and the businesses really aren't growing. And I mean, McDonald's is a great example. They've had almost no earnings growth for a decade now. And the only reason the stock price is up is because they've levered up to do a big buyback. And right. I mean, that's great. But what if earnings comp negative and suddenly your leverage ratios blow out? Like, look at Budweiser. It's a great example of what happens when all you do is financial engineer instead of run your business. I mean, they missed bad. Like, I can't remember the last time I had a Budweiser product, quite honestly. And the same goes for any of my friends. So you have this high return on capital business. They put too much debt on it, and it starts comping negative. But it's been trading up all year because it's a safety play. It's a financial engineering play. It's inflation resistant. It has all these attributes that attract lots of different classes of people. The only attribute it doesn't have is that, the earnings sucked. And it's over-levered. Stock's down $10 today. And I think you're going to see this in a lot of these over-levered companies that really haven't run their businesses very well. They've ran their balance sheet well, if well means levering up and buying back stock. But this will all come back to roost eventually. I think McDonald's is a perfect example of what happens when, your business goes nowhere and you just lever up. Budweiser the same, Visa, MasterCard, their businesses are growing, but these things are over-owned by all the hedge fund community, all the growth guys, and I don't think they're great companies. They grow kind of slow, and I don't know why anyone would want to own these things.
Well, I think that they're safe, right? And think about the
what does the word safe mean?
Yeah, but think about all the this proliferation into the low vol kind of ETF world, right? It's just huge. Like they own just gobs of this shit. This is like what they own. And so I think that it might be a sign that you get a rotation within the market. And that's one of the things to watch for, is that you might get a kind of a situation where Visa and MasterCard and McDonald's are rolling over, but there's a new leadership coming. And
absolutely.
You're finding Main Street stocks are headed higher instead of just the financial engineering stocks. And that's what I'm hoping for. Okay, number 3. This is my favorite. Do German yields break out from here? What do you think?
Absolutely. Absolutely.
Really? Oh God,
Look,
you sound more bearish than me in terms of German boons.
no, look, the biggest bubble in human history wasn't Tesla or, WeWork. It's that 15, 16, what is it, trillion that went negative. Like, it makes no logical sense. And at some point, when something doesn't make sense, it'll start making sense. And the way it makes sense is that, yields go positive. And when you think of how duration works, you have a lot of people who are going to have some huge mark-to-market losses if yields go even sort of positive. I mean, what if bunds go to 50 bips? Like, think of historical precedents. That 50 bips positive would be, that would be really, really cheap.
It would still be the cheapest level that they had been prior to this stupid rally. Like, let's face it, like I agree with you completely that this has been the biggest bubble we've ever seen. And I always, like I've said this before, but people always tell me, oh, if I was around in the .com bubble and traded, I would have shorted the shit out of those. That was so obvious. Or they'll tell me if I was around, I could have done the big short because it's so obvious that there was all these issues with the real estate and the credit bubble. And I go, bullshit. If you were there, you would have got your face ripped off like everybody else, and you would have eventually believed in it because that is why those opportunities existed, because nobody believed differently. And this is where we are today with bonds, and especially European bonds, that nobody believes that we can ever create inflation. And that's why they think that this is, even though they acknowledge that minus is stupid, they just think that inflation's never going to come. And I contend that the biggest financial crises occur for the things that everybody tells me there's no way it can happen. Just like, the internet's going to change the world. There's no way that the stocks are overpriced. Housing on a national level never goes down. That's no way that's ever going to happen. Well, no way we're ever going to get inflation, I think, is this cycle's thing that can never happen. Look, that will happen.
I think we're at the very tip of the spear where we're about to start seeing some fiscal in Europe. We're going to see some fiscal in the States. And when you start doing fiscal, it's a crowd pleaser. Everyone likes fiscal because you get reelected. And, there's been no inflation, so they figure they could just, do whatever they want. I think they're going to take fiscal way too far. You're going to see a whole lot of inflation. And not only is QE done, but I think the Fed's going to be forced to panic because, people get voted out of office, or you have revolutions over inflation. People don't have revolutions over, the stock, SPOO's hitting 3,000. I genuinely think this is the sort of the end game is you see a lot of inflation. I was talking to a really smart friend of mine today, and he's an inflation guy also. And he said, so Harris, what has happened to your cost of goods basket for taxis? Well, I don't know. I haven't taken a taxi in 5 years. I've taken an Uber. Exactly. My cost of goods dropped by half. Well, what happens when Uber goes bankrupt? Well, I'll probably take a taxi again. Well, that's inflationary, isn't it?
Yeah. No, you're right. There's so many things like that.
Now apply that to WeWork and everything else in the world where you have these guys giving away dollars for 70 cents. That's been deflationary. It's forced everyone else to basically give away dollars for 70 cents or 101 cents. Well, what happens if people have some pricing power and some margins again because all the frauds go away?
Yeah. Although I disagree with you, Harris, about the idea that this is going to cause like the end of society, because I think for a long time it'll feel good. It won't be it'll be a decade before we're really like upset about inflation. I think at first people will really embrace it and it'll feel good, and there'll be lots of positive attributes to it. You'll get young people buying houses. You'll get some of the debt getting reset, in terms of the people that are most indebted. You'll get wage inflation that's been so stagnant for the longest time. And yes, I understand that inflation also hurts the very poor because they're the ones that can't afford it the most. I think that what you've had so far is basically financial asset inflation, and that's what's going to happen is that the regular inflation, the financial asset inflation will go away, and it will be replaced by Main Street inflation. And I think that the average Joe will be better off for a long time before that actually gets to the point where they're, voting people out of office for it.
Well, the history of inflation is that it's highly unpredictable and uncontrollable. So I don't really know what will happen. I mean, we've seen inflations that have come out of nowhere in a year or two and wrecked society. Think of the French Revolution, or you've seen inflations that last for decades and they're just kind of this slow, ongoing muddle. Think Argentina. And I just don't really know.
I guess that's a good point. I would argue that it's not going to be like that. It's going to actually for a while it'll be welcomed, and it'll be like those when the aliens come and they bring new technology.
Yeah,
and,
I'm not saying to go buy a bunch of gold. What I'm saying is that interest rates aren't going to be negative 40.
I completely agree with you there. The best risk reward on the board is to short like German bunds and figure out a way to do that, because I think you're going to wake up and we're going to wonder and laugh about the idea that we couldn't ever create inflation. Okay, number 2, let's do it. The FOMC meeting. That's the big one to watch. The markets basically assume that October is priced in as a quarter cut. Do you think they do the one and done and walk away? Like that's the real question, I think, going forward.
I thought they'd be one and done the first one, so I'm the wrong guy to ask. It makes no sense to be cutting interest rates at all-time highs. What are we, 10 handles from all-time high in SPOOs with the economy still doing reasonably well? Like, I don't get it. I don't know why they're cutting. So if I don't understand something, I can't have an opinion. Sorry.
Well, no, but I guess that you would definitely be in the opinion that you would have been more like the Jay Powell camp that was trying to get out ahead of the basically the financial exuberance and do that. And the trouble is that he can't tune for financial conditions. He has to tune for economic conditions. And you might then say, well, look, there's no real problems in the U.S., but the trouble is that there's real problems throughout the world. And like it or not, the U.S. is the central banker to the world. And without them having cut, it would have been difficult for this to for this kind of rebound in the global economy to manifest itself. We would have just got a continued rally in the dollar. But anyways, I agree with you that that more than likely this is getting towards the end. I think he does a one, and we'll wait and see. One of the things is that the market often gets upset about him. I saw a stat the other day that 10 out of the 12 FOMC meetings under his tenure have been down for on the day. So it'll be interesting to see if he can break his streak, because before him, it was the opposite. It used to be that the SPOOs would rally, and they no longer like him like they used to like Yellen and Bernanke. Anyways, number 1. How badly will Patrick get schooled on the panel with Brent and Grant? So for those who don't know, Patrick is in San Francisco at the Golden something Silver Summit. I'm not sure what it is. And he's on a panel with Brent Johnson and Grant Williams. And we were just thinking to ourselves, he's going to just get annihilated, wouldn't you say?
Yeah, Brent's a sharp guy. I debated him in Cayman. I was at Raul's Blacklist event, and Brent's a smart guy. I disagree with him. I'm still bearish the dollar, but he's a smart guy. That's a tough one.
I didn't know you were to the Blacklist event. You were on the panel. That's pretty exciting stuff. That's like a little inside baseball. What was that like? Was it fun?
Oh, it was great. Actually, put it this way: they invited me to go. They paid for my airfare, my hotel. Like, all I had to do was speak for 30 minutes. And
that's a great deal.
It's the best deal ever. I got a trip to the Caymans. But along the way, I met some really interesting people. Like, I've been to a lot of these sort of things where people try to put together 20, 30 smart people in a room and hope magic happens. And, Raul did it super well. Like, the people there were interesting. This isn't like an advertisement for the process, but, I walked out saying, I'm probably going to pay and buy myself a subscription, and I don't need to speak again. I actually got true value out of meeting people who had different opinions.
Well, that's good. No, yeah, that's a great, like the great kind of insight on that. I have one question for you though. Is Brent really 6'5"?
Yeah, he's a big guy, which makes him even scarier to negotiate against, or I guess debate. Plus, he's got these zingers. I mean, he's been on TV a lot. He's got these lines, and he catches you off balance because you kind of start laughing and you forget like the counterpoint. He's just good at it.
Oh, that's funny. He's a good guy. I really like Brent. Although I tend to disagree. I think you and I are both in the opposite camp of him. I don't buy this idea that the milkshake is about to drink the world's thing. And I think that his trade has been what's happened, over the past couple of years, and he's been absolutely correct in analyzing and explaining it. But like all things, it comes to an end, and I think that we're at the end. He thinks we're just at the beginning, but I think we're at the end.
Yeah, and look, the dollar's had everything good that could possibly happen to the dollar. We've had interest rate differentials, GDP growth differentials. You've had repatriation because of the change in tax law. You've had all the growth stocks being in America. Like anything that could go good for the dollar has happened, and the dollar's kind of put it in the right shoulder of a Head and Shoulders. Let's be realistic. It's up a couple hundred bips, but it's gone nowhere, really. It's gone nowhere for many years, actually, almost 5 years now. And if all the good news happens and you can't move the dollar up, if some bad news happens, look out below.
Yeah, no, I'm with you. Okay, well, let's go on to the last thing, our parting words of wisdom. And, I think this is great. This is Joe Granville said, if it's obvious, it's obviously wrong. And I thought that was just so, that's one of my favorite lines. And I can't tell you the number of times that people say, well, why is this stock up? The earnings, the earnings were down. And it's like you have to explain to them that it's all about expectations, and that what you see, just the first level thinking is never what's moving a stock market or financial assets in general.
Yeah, that's look, that's Tesla in a nutshell. The numbers are fake. The company's fake. There's thousands of people dedicated to exposing the fraud, and here we are at 3:30.
Right, because you guys, there's too many of you that had assumed that it was going to get bad too quickly.
It is bad too quickly. There's just too many people short. It can't go down.
Well, there you go. So it's so obvious that it's headed. It was so obvious that it was headed lower. It's obviously wrong. There you go. Joe would tell you shouldn't be shorting it. Okay, well, Harris, thank you so much for joining us. I really appreciate it. Why don't you tell people where they can find you and where they can learn more about both you and your product that you offer?
Sure. You can learn more about my blog, Adventures in Capitalism. I post about once a week. And if you want to know something about my fund, praycap.com. But don't bother coming unless you're accredited.
Okay. Well, thanks so much. It was really nice of you to jump in and take over Patrick's shoes. I hope everyone else has enjoyed it. I know that it's probably a little bit different, and Patrick obviously does a lot more preparing, and I hope that next week we return to the proper format and I get everything done properly. Anyway, thanks again, Harris.
Hey, thanks for having me on. Appreciate it.
So joining us now in the After Hours is Chris MacIntosh, the founder and writer at Capitalist Exploits blog. Chris, as I mentioned, you actually live in Singapore. I've never had the pleasure to go. People tell me that it's a Westerner's best place to go in Asia. I see Jim Rogers is there's a lot of smart, wealthy people that have joined you as kind of moving out there. But one of the things that I would love to pick your brain on is what you see happening in Hong Kong, and whether you think that Singapore will be kind of beneficiary of that continued unrest in Hong Kong.
Yeah, look, it's something I've been writing about for some time, actually. I kind of got a heads up earlier on with some private bankers in Singapore who were telling me, look, we're seeing some serious capital coming in from Hong Kong, and this is way before any of the rioting or anything that took place. In fact, it's been going on, Kevin, for about 3 years, but it's sort of that trickle started becoming stronger and stronger. So a lot of the wealthy people saw the writing on the wall well before all of this kicked off into high gear. But yeah, so Singapore's going to continue to be a beneficiary of capital flight from Hong Kong, and I kind of think Hong Kong's finished. I know people don't want it to be that way, and I've got a lot of friends in Hong Kong who certainly don't want it to be that way. And there are those who literally can't really leave. They're either not wealthy enough, or they just don't have, options in terms of, passports, even, for example, to get out. And for them, they're deeply concerned. They don't want to be China. So
tell me why you think Hong Kong's finished. Do you just think that China will be forced to kind of continue to wrap them in their iron fist? Like it's just a matter of time?
I think this kind of comes back partly to the topic we were talking about before, Kevin, which was all about energy. And one of the other components of that make energy pretty interesting to us is the geopolitical landscape. And what we're seeing there is the US essentially pulling out of the role that it's played for, I guess, since like 41. And actually, that role has very much coincided with globalization. It's been phenomenal,
Right.
and it's brought about relative peace and stability. And what we're seeing now is the US pulling back on this. They're out of the Middle East, or they're increasingly getting out. Now, like, I know you probably got a lot of listeners that are Americans, and there'll be many of them who piss and moan about how the US shouldn't have been there and they shouldn't be intervening and whatever. I don't care. The point is that they have been and now they're not. And then you got to ask yourself, what does that mean? If you look at like previous administrations, they'd always use military enforcement as well as quote unquote diplomacy, which really just when you're the big dog amounts to, hey, folks, this is how it's going to be, play along. That and economic incentives and trade deals and things of that nature, right? To try and get their way essentially. But what it did was it created this massive globalization, on relative stability, which is what empires do. The Brits did it before with the British Empire. Anyway, so what we're looking at now is a very different approach. The military is just getting pulled out. There's now just heavy economic sanctions with literally zero military enforcement, and I don't think it's going to work. It certainly doesn't work. It would work more with a sort of democratic Western type of power, but we're not necessarily dealing with that in many of these instances. And so, if you look at what that means for like Hong Kong, and certainly even for Taiwan, I mean, if I was the Taiwanese government now, I'd be pretty concerned, because think about it like this. If we went back to 30 years ago, if we had a similar setup in Hong Kong today, what would the US response have been? I'm pretty confident it would have been a fairly strong military intervention to ensure democracy. Because look, I mean, how long did they fight the commies, right? There was what Vietnam was about, and so on and so forth. Anyway, so that's all pulling back, and I can understand it. Part of it is also there's just no appetite for the Americans on the ground for any sort of military intervention. I think to a certain extent Bush cocked that one up with the whole weapons of mass disappearance, and so it's pretty hard to now go out and say, "Oh, we got to get back into whatever it is." It doesn't really matter. You've shot that bullet. And
so, what do you think the investing ramifications are if the U.S. withdrawing from being the global cop of that keeps peace? Like, how do you change the portfolio based on the development?
Yeah. Well, look, it comes back to what we're starting. We began this discussion talking about this narrative around bonds. The only way that bonds continue to outperform is if, and this is, I guess, the bull's argument, deflation, right? It's what's at the 3Ds, right? Demographics, debt, deflation.
That's right.
And so if we look at that, firstly, a country can only raise debt if it's still a functioning country and has relative political stability, right? Countries that don't have political stability don't raise debt. Syria's not running bond auctions. So when you get this power vacuum, and we're going to see it we're seeing it in the Middle East, and I think it can quite easily spread. There's that whole component changes with respect to the bond market, and that whole deflation narrative. The other thing that I think people miss with the deflation narrative is, again, kind of like how the generals fight the last war. If you look at the last inflationary experiences that we've had, they were demand driven, but demand doesn't need to be the only thing that actually drives any particular asset price. It can be supply destruction. And so if you think of a political void globally, that increases the costs of insuring your ships that travel. If the Navy's not there to protect them, and so on and so forth. It's logistical supply chains. All these things get impacted, and they can ripple through those markets to the point where the supply just gets constricted, because you and I are running a business, and let's say we're running, I don't know, 20% margins, and now our cost of shipping the goods has gone up by 10-15%, and some other tariff or something has been implemented because we can't trade with this country or in that country because there's a geopolitical element here where basically everybody's sort of going back to tribalism to a certain extent. And we just shut shop. We can't do it. And so then a supply destruction. So that's where I can see a lot of that potentially taking place.
Well, the other thing is that, you talked about the U.S. being the cop of the world, but that's also coincided with globalism, and globalism is being deflationary. Whether it be the fall of the Berlin Wall and a huge amount of supply of labor that came on there, or the fact that China entering the WTO was hugely deflationary. And now, if you just think about those deflationary forces caused less inflation and lower interest rates. If you just take a simple approach, you could argue the fact that if we're reversing those trends, we should see higher interest rates and higher inflation.
You absolutely nailed it. It's been one of our core themes, and I've written about it a ton on the blog, and I've pissed off a lot of people, I think. But look, it was like when Trump came to power. I remember writing an article that I got a lot of flack for, and it was about Duterte, and basically I said, this was it must have been 2016, I think. And I said, the West needs to pay attention to what's happening in the Philippines, and kind of here's why. And I talked about the rise of strongmen. I think that's what the post was called. In any event, what it really comes down to is this fracturing of those allegiances that existed, and a shift towards essentially strong men. I'm not saying they're strong, but perception of strong men. So like Duterte is a strong man, Putin's a strong man, right? She's a strong. And that's, again, it's like a social thing. When times are bad, we actually, as humans, we look for a savior. We look for someone that's going to do something. And the worse the situation, the more we will accept somebody who seems pretty fucking crazy, right? So like Duterte coming out saying the things that he says, that would never fly in Singapore, politically stable. Like, people would just go, "What? Are you mad?" But in a place where there's a lot of problems, they're like, "Yeah, no, we need a guy like that, right? We need Arnold Schwarzenegger. Right. He's going to come in and he's going to just, take it back." So anyway, so all of that is contributing towards destabilization of that whole globalization trend. And the other thing that I think is kind of important, and you touched on this, was the cost of capital. And so when I look at, there's a feedback loop here. So if you look at the commodity markets, they're incredibly capital intensive, right? And so if you think about having the supply destruction, let's say you got a project and your baseline assumptions factor a particular interest cost. Now that cost rises, right? As a consequence of just interest rates moving just even ever so slightly.
Right.
Now it's not even so much the interest rate. If we move to a point where not just the interest rates are rising, but the future expectations are that they will rise. Think about how your hurdle rates look. If you're a quant, right? You're one of those pointy shoes sort of sits there with your cardigan and playing Scrabble for fun and your pencils, and you're the guy that has to do all this quant stuff, you're going to refactor your hurdle rates, and you're going to go back to the board and go, sorry guys, this isn't going to fly, because again, you got major projects. These things are 5, 7, 10 years out, right? So it doesn't really matter what you're looking at now in terms of, what's the interest rate tomorrow, what's it in 2 years. It's like you're looking 5, 10 years out, saying what is it going to be, and what price do we need in order for us to actually commit capital now and risk it.
Right.
So the only way that then starts to work is when you just have a higher price of the actual good. Now, here's the other interesting thing. If you've had all this supply destruction, you have, so the asset prices start rising. As the asset prices rise, the shift of capital from the bonds, because remember, like, anyone who's been investing for the last 10 years at least, in terms of major capital allocations, it's been into the bond market, and then it's been into those risky assets like venture capital, where it's all about production growth. That shale actually fits into this. So it was never about economics. It was just about, if you could show growth, right? Which was WeWork. It's all this, all the shit that SoftBank has now got sitting on their balance sheet.
Because there was so little growth throughout the world that people were overpaying for what actually could grow.
You look. You might, let's say you've got a I don't know, 60-40 portfolio, right? The traditional bonds, equities. Well, your 60 was just so shitty, right? Because it just, you were getting no yield. So on the 40, you were like, I have to make up for the fact that I'm not getting much on the 60. So it pushed people further down the risk curve. Now, you probably don't know this, but way back, I started a venture capital company. And part of my whole reasoning for doing that was that I believed that we'd see this shift to the far end of the risk curve. And I was like, shit, how do I participate in that? I'm like, that's probably the best way. And I sold and got out of that in 2016, which is, in hindsight, a little bit early. But I was like, things were seriously loopy then, like seriously loopy. And I was like, I have to get out. This is nuts. I mean, I can't. This is crazy.
And it's gotten even crazier.
And it got crazier. But you can see how quickly that changes, right? So what WeWork were going to, at one point, it was 65 billion they were valued at.
85, I think they had it at.
Crikey. And now it's worth 8, I think was the last thing where
yeah, I know. Without even a trade. Like without a trade. Just basically almost overnight.
Exactly.
It's gone down 90%.
Yeah.
It's just, and this is people, listen, you don't have to get me started on this. The private equity side, the bubble is actually more there than any parts of the equity market. Like people are worried about the regular stock market. I think that it's nothing compared to what these guys that are marking to. Sorry, go ahead, Chris.
I said, and guess what? There's no liquidity in that. It's not.
I know. Well, as they just found out, right?
Yeah, I mean, in the equity market, there's, you take a hit, and sure, stuff can drop. But like, I mean, this is so I wrote an article about good old Masayoshi-san in, I think it was April this year, saying this thing looks like a fucking bug in search of a windshield, and here's why. And so but the thing with them is that they're so huge. Like, when you look at distribution, so like Google, for example, own 80% of search, and that Pareto distribution exists across pretty much everything. These guys are that Pareto distribution. They're like 80% of that. They literally drove the market. And so, I mean, I was in that space, and it was literally like, oh, SoftBank are investing in this deal. You have to get in, right? And to a certain extent, you were like, okay, well, which round are they in? Like, if it's the first thing, you probably get into it. Why? Because you knew that they'd come back in again with their next fucking massive
That's
tranche.
right.
It didn't matter whether the company was ever going to make money. Like, you know what I mean? You just knew.
Yeah, I hear you.
So
You're just front running SoftBank.
yeah, exactly. And that's so dangerous. So now we're at a situation where it's like, well, SoftBank basically going to need a bailout. And
Well, they're going to need to keep they need to keep bidding for these stocks because they took it up and they're the only bidders. That's what they realized, right? Like,
not to raise any more capital because the
Yeah.
LPs are going to turn around and go, what the hell? And so when you think about it like that, right? Let's go back to our discussion about commodities and cost of capital rising. Where do your just average investor start looking at? They'll go, well, hell, I'm not going to get into these wannabe unicorns backed by Masayoshi Son because that dog no longer hunts. No, now you're going to start looking what has performed well, and you're going to start looking at these weird as fuck things called commodities, right? Why? Because they were the only thing that started to go up. And so I actually think all of this points to just, again, people were looking for inflation, thinking that it was going to be demand-led, and it's not. And inflation is going to be supply destruction, which, if you think about it, is actually it's stagflation. And that really is the worst of all worlds. It's
right.
like contracting
Yeah.
horrible STD without even enjoying the act that gave it to you.
Oh man, Chris, you were made for the huddle, bud. So how did you end up? I'm going to embarrass myself. I want to know how you ended up in Singapore, but I'm going to guess that your accent. You're South African.
I'm a thoroughbred mongrel. Yeah, born and bred in South Africa. Spent some time in Zimbabwe and Wales.
Okay, so I did not embarrass myself. I guessed right. Okay, so why don't you tell us how you ended up in Singapore? I see that you were at Lehman Brothers. Were you there during the during the end of Lehman Brothers? And just why don't you walk us through? Because it's not often we get somebody with such a varied past.
That was early days, well before they completely cocked things up. So I started off I thought I wanted to be a lawyer, actually. It was weird. When I was like 16, I started reading bloody John Grisham books, and I was like, yeah, fuck it, that's it. I'm going to be a lawyer. He's cool. All those guys are so cool. And so I started studying that, and I was doing it all. I was lucky to be the son of completely broke parents. And so I left Africa to go and live my own life 2 weeks after I finished high school. And I worked full time and studied nights, basically. Anyway, so that's where I then second year, and everything was correspondence. I was studying full time, managing to do full time studies while still full time working, which actually just.
So where did you go? Like you said, you left Africa, but did you go to London?
To London, yep.
Okay, yeah.
So, anyway, I found economics, and I was like, "Oh, this is kind of cool. This is even cooler than Grisham." And so, I basically switched pretty much, and so I spent some time there. Worked for a bunch of the behemoths, and I was fortunate enough to have a really awesome boss who one day sat me down and he said, "Chris, you shouldn't be here." And I was like, "What do you mean?" I said, "Like, I enjoy this. This is cool stuff." And he said, "No, you don't have the right temperament." And that was basically, I would tell him, what's the word? Not outspoken,
what you thought, and you didn't have the right temperament because you told him what you thought, right?
Yeah, and I mentioned something in a meeting before, and that's when he pulled me aside, and he said, "That was fine." He said, "Nothing wrong," because I was just bringing up something which needed doing, and it was, I'm not stupid to go and say things that you can't really be saying. But he said, "Look, if you want to get far in this here, you basically need to do some brown nosing to a certain extent." And he's like, "And you're just not that guy. So you need to do something else." Super good guy. Really, really cool. And then actually, I got inspired. I was working at JPM, and there's this Aussie dude who sold a FX trading firm to to JPM, and part of the deal was that he had to work for them for 2 years, right?
Okay.
And help transition the business and blah 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 blah. Anyway, and this was back when we still wore suits. It was like you had a Friday dress down, but everything was like.
Oh, I remember those days.
London.
I remember those. My bank was the last bank to do that. We held tough. We were the last ones when finally everyone decided that Friday casual day was something. They finally let us do it. Yeah, like that's how uptight we were about it. But anyways, go on. Sorry.
Yeah, so this guy, I remember he bloody wandered into the London office in we call them jandals here, or sandals, like flip flops,
Yeah.
pair of board shorts and a t-shirt, and that's how he came to work. And he was classic, super smart guy, really, really, which is how I built a really successful company. And he was like, "Fuck it, didn't put that in my contract and tell me what I could wear." So,
So you realized you wanted to be more like the Jandal guy.
well, I hit off well with him, and we started talking a lot about sort of entrepreneurship and then I started getting into leasing properties in London, arbitraging. So like I was living like a bloody squatter, big house, 1 bedroom. We rent the bedroom out, and there's tons of other people, and there's like one bathroom, and I think there was like 15 people in the house.
Right.
And they're all Aussies and Kiwis and South Africans that have come out for, a year's work on a visa, and then they're going to travel around Europe and see how many girls they can nab, drink too much, and all that kind of fun stuff. And the point is that none of them want to have any long-term lease. They don't want any obligations. Like, they're there to have fun. And
Right.
so I quickly saw that there was this massive difference between the long-term leases and short-term leases. So
That is
started
awesome.
leasing houses, and then I basically became a slumlord.
You're like the original WeWork, because that's what WeWork does, right? Like they arbitrage between long-term leases and short-term leases.
Exactly.
You were just doing it for fellow members of the United Kingdom, and that they wanted to come to London. You did it. You were the original WeWork.
I should have fucking patented the word "we." Damn it! I could have nailed that for 6 million.
That's a great story. And so, how did you end up in Singapore? Did you choose that? Like, was that something like you went around and said, "I want to live here," or did you end up there for a job?
No. So I quit work there. I found a girl who was drunk in a pub, and she thought I looked good because she was drunk. And then I never let go of her because she's quite good. And so she's been my wife now for maybe 17 odd years, I guess, something like that.
Okay. And is she from Singapore?
No, she's a Kiwi, which is
Okay.
where I actually spend a lot of time. And the business is based in Singapore.
Okay.
So, but we've lived all over. We actually spent some time living in Thailand, and so the business is based there. And then I spent a bunch of time there, and I'm actually right now I'm in New Zealand.
Okay.
Yeah.
So what's your favorite place to live? Like, where do you hope to spend more time going forward?
There's something to be said for Mordor.
Mordor? Oh, I see. New Zealand. Okay.
Yeah.
Fair enough. I get it. I was a little slow on the joke, but yeah. So I've never been. Is it just the kind of a friendlier, nicer Australia?
You've been to British Columbia, right?
Yeah, of course. Yeah.
Yeah, because you're a Canadian. So it's quite similar to British Columbia, except better weather. And
okay.
If you've been to Switzerland or Austria,
yeah, I've been there.
It's got elements of that, and then
but with no Swiss, so it's okay.
Yeah, without the Swiss, and then the beaches are like Fiji or Hawaii, and beautiful white beach. It is quite honestly the most beautiful place I ever been to, and like my wife and I, we traveled. For like 4 years, we hammered. and we hit like about 60 different countries, and we traveled a lot all over the place. And I'd never actually been here. And I came here and I was like, bloody hell, this place is just phenomenally cool. Yeah,
that's great. Okay, well, I got to go. It's on my list. And maybe I'll go and I'll never come back. Anyways, Chris, it's been a pleasure chatting with you. It's been lots of fun. You are truly a perfect Market Huddle guest in terms of the stories, and I especially liked all your kind of stagflation arguments and the fact that you weren't telling me that bonds were going to go to -4%. So thank you so much for being on. Why don't you tell people again where they can find you? And I highly recommend that everyone go and sign up. I see that you have a free newsletter that you can kind of get some updates from there. And why don't you tell people where they can find you?
Yeah, sure. So website's capitalistexploits.at, although if you put .com, it'll take you there anyways. And then Twitter handle is at capitalistexp. So that's it.
Great. Well, thanks again.
Thank you, Kevin. It's really, really appreciate talking to you. I've been reading your stuff for Brent Johnston put me onto you.
Oh, okay.
Yeah.
Even though I'm often on the other side of Brent's thing, he still seems to be kind enough to tell people that they should read me.
and so they should. And so they should.
Okay.
Yeah.
Well, thanks again. Take care. Have a great weekend.
Awesome. Take care.
Okay, Lena, you there?
Yep.
Hop on.
How'd that go?
Do you know what? Oh,
I
went
think
great.
we're really great.
Yeah, so I screwed up on a whole bunch of things, like my market wisdom, or not the market wisdom, my
Parting with
market history stunk, but that's what happens when you don't prepare anything.
Hey, when do we do the part about what we're drinking? Because I'm drinking Luminar Mezcal.
Oh.
We're doing it right now, baby. This is what's happening right now. Like, we're right there now. One of the things is that Lena and I are drinking Kicking and Screaming. What do you think, Lena?
To be honest, I actually haven't taken a sip of it.
Oh, let me sip.
I have to open a new one.
So you guys are onto beer.
Yeah.
Yeah. So this is actually, Lena, I was looking at this. This came from Patrick. This is a Brooklyn brewery.
Yeah.
And I really like this. This is my kind of beer. Do you know what? This is something Patrick
Really nice.
wouldn't like.
You think?
Why?
Patrick likes fruity beers.
Ugh.
Fruity
Yeah,
beers are
exactly.
like Guinness. It's just like
They're
random
sours.
opposites.
Yeah, he's
do
got some really.
sours.
He's like, Lena and I basically agree all the time. So listen. Well, let's just ask. We're being rude, Lena. We're not asking our guests. Why don't we start with our guests? What are you drinking, and what do you? How would you rate it?
I'm drinking Luminar Mezcal. I would rate it about a 2.
Oh, no.
Well, I guess when you pay $50 a bottle, you expect something more. Unfortunately, I'm off beer. I'm kind of on one of those keto diets, so I'm kind of grumpy, and I don't know. I've done enough whiskey. I knocked off vodka in about a day 'cause it's disgusting. So I'm just making my way through like second-tier spirits like mezcal, tequila. I'm just trying to figure out what I'm missing in life until the stupid diet's over and go back to beer.
And so, have you found anything that you've liked?
I could put up with some tequila and some mezcal. I could put up a little whiskey. I don't know. Are you guys alcohol drinkers or beer drinkers?
So I'm just pure beer, but I think that Lena partakes in the occasional cocktail.
Yeah, I like gin.
Gin's okay. I haven't
Gin
actually
or pine
explored
sol,
gin.
most people say. Gin or pine sol, but I think gin's delicious.
Are you like a Hendrix drinker or
Yeah, I
a
love
Bombay?
Hendrix.
That's good stuff. Maybe I should be drinking more of that.
Hendrix with a bit of ice and a slice of cucumber. All you need.
Oh, that sounds good.
That's terrible. I don't know what's with you. I'm just a beer and wine guy. So, Lena, let's just quickly do our little review here. Kicking and Screaming, Threes Brewing. I like it. I'm giving it a 9-1.
Oh, that's super high.
Yeah, I like it. I'm a fan. I'm a buyer.
I like it. I would give it an 8.8.
Oh, okay, there we go. So Lena and I usually, Harris, usually we agree, and then like Patrick will be like 6-2, and then there'll be something that's just garbage, and Patrick will be like 9-9, and then Lena will be like, this is undrinkable. Like I didn't finish it. And that's how it usually goes. So you were mentioning you're off to Antigua. Are you taking the whole family?
No, I'm taking myself.
Seriously?
Yeah, when I bomb a trade, I told you this is a cycle. It's discipline. You got to go and you got to unplug.
This is part of the discipline. Going to Antigua on your own. I'm gonna try to sell that to my wife. I'm honestly that like you. I'm gonna get her to call you, and I'm gonna say, listen, I've had a bad run trading. I'm headed off to Aruba to Windsor for a week, and Kuppy told me I should do it.
Yeah, but it's not like joining a monastery. It's fun, but you go take a few books and you go read something, and she'll join me maybe like Wednesday or Thursday, and we'll go see a few islands. But you need a couple days off just to you need a reboot. It's a process. I don't know how to explain it quite right.
It's like
So is Antigua British?
Yeah. I mean, look, if I'm going to have a week off, I'm not going somewhere they don't speak English. It's already enough anxiety. I need them to at least speak English. I've been there a few times. I love it. Beautiful island, friendly people, laid back. And I'm not exactly slumming and backpacking. I'm at like a 9-star hotel, and it's going to be good.
I think I've been there because when I married my wife, we were busy organizing our wedding, and I kind of got to this point where we looked at each other and said, are you having fun? And I said, no. And she says, I'm not having fun. She says, why don't we just go and not have a wedding and go on a cruise and get married on the cruise? So we actually went when we were, I got married when I was, I don't know, I should know this.
Get it right.
I think I was 26. I think I was 26. And I was young, and we basically went on this fancy dancy cruise. There was this boat. It was like 100 people or 150 people on this boat, and we went to all these fancy islands, and it was a lot of fun. And we were young, and unfortunately she got sick. She doesn't travel very well, but Antigua was one of the places that I went to. And my favorite part about the story though was, so we're on this boat, and it's like, as I mentioned, there's a lot of fairly wealthy people there, but we go to St. Bart's.
Oh, that's a fancy place.
Yeah, that's a fancy place, right? Usually the boats don't come in there because they don't let the big boats come in there. And they told me, a buddy told me that stays there, that oftentimes they'll actually close some of the shops when they see the boats come in because they're kind of snobby. But I remember when this one lady from the south, she was on our boat, and she's like an older lady, although now that I'm older, it doesn't seem like she might not have been as old as I thought.
32.
Yeah, no, she wasn't, but she was. She went into like Hermes or some like fancy shop, and they said, "Oh, are you on a boat?" And she said yes, and she was telling us a story at dinner later. She says, "I was so proud." I said, "Yes, I'm on the Sea Goddess too." And they looked at her and went, "Oh," and it was like because we were on a cruise and they basically wouldn't talk to her, and she was just like horrified that they were so snobby. But anyways, and I think one of the places we went was Antigua, so I do remember it is really lovely and nice.
Yeah, no, I could totally visualize that.
Yeah.
I think the islands have a bad rap because people take too many cruises. And look, if you have a couple pina coladas and go to the beach, they all kind of are the same. But there's good and bad ones, and you have to spend some time. And look, I live in Miami, so everything's kind of close to me. But some of them really are quite special, and some of them are really shitty.
Okay, so which other ones do you like?
Well, I really loved Dominica before the hurricane. I mean, that was a special one. There's no beach. It's a volcanic beach. But just super friendly, like natural curiosities, a lot of hiking, very green. Love Montserrat. I mean, just think about it. You're sitting there in your pool drinking a drink, and it's midnight, and there's a volcano exploding 10 kilometers from you, and you just see it in the dark, and there's no lights or anything. Like, it's just cool places out there that I don't think enough Americans experience because they do the cruise crowd. And nothing against cruises. I just don't know. I think there's more to a lot of the Caribbean. Nevis is another great one. I don't know. I like the Caribbean. But anyway,
yeah, you do. You sound like you like it a lot. So is Antigua the one with the famous harbor with the yacht club?
Yes.
I got that right?
Yeah, that's where I'm staying. I'm staying there's an old historic English military fortification there. and I guess barracks and fortification. And I mean, there's nicer hotels on the island, but I'm a history guy, so we're going to go stay at the historic place. It's like 400 years old.
Okay. Well, we'll let you go. Thank you so much for subbing in. I really appreciate it. Thanks for the great stories about the shipping, and we really look forward to it. We'll see you in another month's time. Thanks again, Harris.
Great to do it, and I guess my promise to you guys is when it gets warm in Canada, because I don't do cold weather, let's do this in person.
For sure, that sounds great. You can come up, try some of our beers, enjoy yourself. There's really only about 3 weeks that are warm in Canada. We'll try to get you in on those 3 weeks.
Sounds great. Looking forward.
Okay, thanks again, Harris.
Hey, take care.